Hi, traders. Big red day. A great day to have Tony Greer with us. Tony is the owner, operator of at TG Macro. Tony, second time I've gotten to talk to you. It's been a huge amount of time between our first interview. Great to have you here on TradeGate Hub, buddy.
Thank you so much for having me back, Dale. I must have done something right.
Yeah, so Tony has shows, your own series on Real Vision. I've watched some of the videos that you produce on your own, and why don't I start off by congratulating you on your long oil positions that you were right on time with, and I believe you continue to like them even though they're overbought. You'd buy any pullback in them, right?
You've got that right, Dale. We just reached my objective at 93 and change, which was from the double top equals the double top from October, November. Seems like a logical place for a straight line move to stop,
Yeah.
which oil very much has been from 77.5. So I think we pull back into the moving averages now, but we should be able to get up and go again. The market's staying tight. The inventories are low. And I think structurally we're in good shape in the oil markets.
Okay, so here's just a quick 4 hour. So we could see what you're talking about, but what a huge move. What tipped you off to the move, Tony, early on?
Well,
Was it technical or fundamental? What was it?
You know what it was, Dale, was the continuation of the bull market that we saw when oil ran up to 130 before the Russia
The war?
Ukraine during the Russia Ukraine, the very beginning of that. So what happened from there was we pulled back into the low 70s and flatlined for quite a while. And nothing gets me excited than having to be extremely patient, watching a market that's a bull market pull back and consolidate, because the longer it consolidates, the more excited I get about the breakout. And I sat very patiently throughout the entire fall, spring and summer, without any oil position at all, but known as the sort of local oil bull in the room. And I was saying the whole time, I can't get into this until it does some kind of a show me move, technically,
Right.
where it's different this time than just a flare up to the top of the range. And so when it started clearing moving averages, we worked into a position and then pulled back and tested the moving averages. And when it held there, that was really crystal clear timing. I advised that we added. Yeah, exactly. I advised that we add to the positions and look for the move to 93, and we got it. So as long as, the commodity that you're tracking is following the path that you have in mind, that's when you got to have your chips on the table.
And even through that big correction we had after the invasion, Tony, the oil shares didn't act like oil. All last year, they held up real well. They never succumbed. And that was a big drop from 120 to the, $70 level.
Yeah.
And shares like, I guess they were just cash registers, and they've been outperformers. So, great call. What's better than a great call is a great trade, and what's better than a great trade is a great hold. Something that is really difficult for traders. I call it first daylight syndrome. You're finally making a little money. You don't want to give it back. You get out. You say, "I'll buy the next pullback." That never happens because you turn your head.
Yep.
So,
oh man,
so
you've been low.
Yeah.
Go ahead. I've been lulled to sleep like that before, for sure.
Yeah. So I know a lot of viewers would like to know how you get from point A to point B of, becoming a proficient trader, swing, position trader, scalper. Where did it start for you, Tony? I mean, did you know, say, when you were in school that you wanted to be involved in the markets? Say, when you were in college, I think you went to Cornell.
Yes, I did go to Cornell University, and I knew actually by the time I got there, and actually long before then, that I had something for markets, and only because my dad was had the same seat as over-the-counter trader for Dean Witter for 30 years.
All right.
Yeah, all through the entire time from the time I was a toddler through the late 90s when I was out of college.
When there was a spread and your dad could make a living.
Yeah. So exactly, Dale. Bid offers were something that I heard as, conversation dinner table, at the dinner table after school kind of thing when my dad got home. But he was always so excited about his job, and it seemed so competitive that I knew that was a direction that I wanted to pursue. So I kept
Okay.
looking for a job when I got out of college and wound up landing on a trading desk. But you ask, where did it all start? And I think when I got to Goldman Sachs is where, I really started understanding the rigor that's necessary to manage money effectively and to be able to spec trade and prop trade effectively. And that all comes with, learning discipline. And then really what it's come to for me is patience and pattern recognition.
Okay.
And I start with patience because I don't like to sit around with my money in things where my money isn't generating a return. Like I hate dead money. So I like to sit around with dry powder and be extremely patient until that pattern happens where I say, oh, I recognize this. This is go time, or at least worth the risk reward of saying
Yeah.
it's worth pursuing this because it looks like go time. So that's really part of the technical skill that you develop. That is part of your pattern recognition. Is kind of how I've gotten here.
Well, you just proved a theory to me by telling me your history. Do you know what it is?
What's that?
That Goldman only takes guys from Ivy League schools.
I am one portion of proof of that postulate for sure.
I'm telling you that. Come on, the guys you knew were Ivy Leaguers there when you went, right?
Yeah, I was surrounded by several
Yeah,
of them for sure.
if I had known I was going to be interviewing a blue blood, I would have dressed better. Anyway, Tony.
Me too.
So now let's talk about commodities in general, because I went through your feed and some of your stuff, and you're also a precious metal bull.
I am. I'm pretty bullish on gold and silver right now, generally speaking. I haven't traded silver much, but I am invested in gold, have been invested in gold, own gold personally in the form of physical, which is sort of my monetary insurance policy.
Yeah.
I've been in it for a trade for a couple of years now. I've had it on my pad actually for about a year and a half now. And I still like the performance of it. It's still, for me, this has become being long gold now is trying to be long gold ahead of the central banks who are buying gold because they're selling US treasuries, right? And that's just a broad generalization, but there are several central banks that are lightening up on US treasuries. A lot of them are seen buying gold in the markets. And I think that's going to continue. And I think that's why gold has held up while real rates have sort of taken a beating in the last several weeks / months. There seems to be a natural bid to gold.
I mean, it really, that should be a very major headwind for gold having real rates above 2%. And it is. Would you be open to the fact that we could see most gold bulls aren't? They thought, by the end of the year, we'd be above 2,000, that we might be in the middle of some type of liquidity issue, the way markets are falling. I mean, here's Amazon in a week, right? Here's the regional banks. They're under pressure again. They're trying to hold, NVIDIA. We have a huge island top in NVIDIA, so I've been joking that a lot of longs are marooned on NVIDIA Island, and the search boat is giving up and heading home. Anyway, so, we have this type of liquidity event happening in the market when the dollar is good, almost everything isn't good. What's your view on the dollar? It's been relentless. Do you think we're due for a breather?
Technically speaking, the dollar looks good. Dollar kind of looks like oil to me, where had a big flare up, pulled back, consolidated, and now it's breaking out again. So above the moving averages, Dale, it's hard for me to get bearish. So I can remain a dollar bull. What I look at it is that that's a headwind to my commodity risk. And if it was a falling dollar environment, I would have a tailwind to my commodity risk, which would probably cause me to be a little bit more aggressive. But because the dollar's rallying, I kind of have to keep everything in check and understand that, with a long commodity book, my risk is waking up the next morning and the dollar legs higher again, and everybody wants to crap all over the commodities I'm long. So it's something to consider. I don't trade the dollar at all. I don't have any risk on it.
Oh, yeah. I noticed I think your pinned tweet are things that you have promised yourself you wouldn't trade anymore. Right.
Something like that. But it's not as much as it wasn't for a factor like that I got burned really badly or anything
Yeah.
like that. It's more of I use the dollar and the rates markets as my speedometers.
Got it.
I'm really a natural resources based equity investor. And I can tell when I have those two speedometers on my side, and that ideally, with a long commodity pad, I like higher yields and a weaker dollar. Sometimes that happens, sometimes it doesn't. But that's when the commodity markets have a real tailwind. So you don't get it all the time, but that's kind of how I use the FX and rates markets. I'm not a bond trader and I'm not a dollar trader at all.
Are you a believer in a Japanese yen correlation to yields?
Yeah. Yeah, I've seen
Okay.
that chart and I have to be, right? That's evidence-based and study right there. They look like they track yields almost identically. Isn't that right?
Yeah. Yeah. And so that almost looks like oil too. So you've had yields and the yen going up and oil going up, and we have the BOJ tonight. And I have massive divergence in the yen. I'm probing it I actually shorted it after the Fed yesterday. Do you keep an eye on this being a gold guy? Because the correlation between the yen and gold at times is pretty close too.
It is. It is. And that, like you said, for that reason, I almost have to, being in the precious metals markets and being bullish gold, you have to have an eye on dollar yen.
Okay.
It's the same thing though, Dale. It's I have to use that as my speedometer in the gold market and when I'm buying gold stocks. And sometimes the setup is there and sometimes it isn't.
Okay, so you talk about speedometers and you're an investor in natural resource stocks. So I have to ask you if the speedometer is broken on the miners,
Yeah.
because if I think it's the most unloved group on the board, Tony, because people that love them won't even talk about them anymore. A lot of people went into the miners because they were worried about an equity sell-off. And instead of giving 10, 20, 30% back to the SPX, they gave it up in miners. So here's GDX right here. These are the blue chips. What do you like the miners here? Or do you think we could get one more wash? Or trying to come back here today, but a lot of them I follow really haven't been acting well, especially the silver. So here's the silver juniors,
Oof.
new lows. And here's AG, which used to be a pretty good bellwether for silver. And it looks to me like we're getting closer to a bottom. We're almost at that wedge line down there. So do
Could be, Dale.
there's people talking about, Tony, this could be a generational bottom in the gold shares and silver shares.
Well, once we find one, right? I mean, to me,
Good
that
one.
yeah, they
Yeah.
haven't they haven't shown signs of much technically either way for me, right? They look like
Yeah, the only thing they have going for them is this is the second divergence on the weekly at new lows. So we confirmed here, we diverged here, and this is the second divergence that may be setting up.
outflows, bro,
Okay.
outflows.
All
Doesn't
right.
matter, Dale. You look at the chart of flows this year, and
Yeah.
it's technology up at the top with everyone is buying, and it's outflows in everything, natural resources and energy. I mean,
Okay.
the energy markets are fighting the same battle. We saw oil rally like 5% in the last week or two. Energy stocks are all lower already. Like they started falling behind as oil was rallying. So this natural resources space, it's just not loved right now because nobody's getting paid by the performance and everybody's chasing that, that tech buzz where they can get,
Well,
really fast returns. So
well,
we'll
the
see what
last
happens.
few weeks have been a buzzkill for tech. So
Yeah, it's going to
there's
be challenging with rates rising, won't it? So we'll see what
yeah.
happens. That's why I'm a believer in higher rates for natural resources.
Or China, something I talked about months ago on Real Vision was that I was bearish Apple, of course, early, 170 and then 185. And part of the narrative was that China was going to retaliate against an American icon, Apple. And that happened a week ago. So we also
Great
have
point.
some geo stuff happening here in the markets too. Do you think Xi is willing, because everyone's waiting for them and to bring out the bazooka and they haven't, that by design, he would take a lousy economy to cause pain in U.S. markets?
That's a tough question. I've read a lot about him, and I'm afraid to sort of speak for him or say what I think that he might be doing.
You're safe. You're safe.
Yeah, yeah, no, that's
Maybe.
fair. Yeah, maybe exactly. He's an interesting cat.
Yeah.
It could be, there could be a situation where maybe they're portraying economic weakness to try to fight, to try to get the oil price down and things like that. There's all kinds of theories out there. Yeah, about things like that. So yeah, I do think that there's probably some kind of international coordination at some level. But he's a little bit too tough for me to get a real read on. The only thing I can do is watch the screens. I mean, it looks like the yuan is under pressure. The markets are under pressure over there right now. So, it may be a little bit of a rough ride for them. It'd be hard to say that you would pull something like that off on purpose very successfully, but what do I know?
Okay, so the yen made a new high, and they trade pretty close hand in hand, the yuan and the yen. So here's the yuan right here, and the yen made a new high and is reversing. And actually, the yuan showed relative weakness compared to what the yen did. With the yen making new highs, we might be putting in a right shoulder here. So maybe for a while, this could be a sign that the dollar might take a breather. I hear a lot of banks are talking about telling their hedge fund clients to use the yuan instead of the yen for carry trades. Do you think people are going to do that?
It can't possibly be as liquid as the yen in the markets today, right?
Yeah, there you go.
I don't know how that would work, but
yeah. Okay. All right. So let's talk about S&Ps.
Yeah.
I was bearish early, like in June.
Nice.
Okay. But I took heat during this blow off in July. It wasn't fun. The consensus view here, Tony, is that this is just a correction. Okay. A pause to refresh, and that we're going to put a low in sometime in early mid-October, and then melt up to new highs by the end of the year. So I think 4,200 is a natural battleground to see if that works. But are you in that camp, or are my spaghetti lines here, which point towards something a little bit? It's a new indicator. It's proprietary. It's shaky hands, and I just left it there because people are fascinated by my spaghetti line indicator. Actually projects all the way down to 3,000 in the S&P.
Wow. That's interesting. Yeah, I wake up an S&P bull generally, Dale. I'm bullish stocks. I can, as a bull, I can weather a move to 4,200 with no problem at all. That's the kind of thing where I stay bullish through the waterfall that we're experiencing, and I expect it to get worse. I do think that we probably touched the 200-day moving average. I don't get fatal about the stock market. I still have confidence that the Fed is really good at managing rate expectations and the markets together. And, we've managed to get rates from 0 to 5% and then pause and get the S&P from, 3,000 to 4,600.
Great point. Tip of the hat to Jay Powell. I never thought it would happen. The magnitude of the sigma of the move in rates and the market with those headwinds, and most recently until this week, fighting a strong dollar, fighting yields. I mean, the 10-year was lower when the stock market was here.
Yeah,
right? We were at 4.3 last October.
Yeah,
and now we're above it, and the S&Ps are here. I mean, is there a it's amazing what it did with those headwinds. So as soon as the Fed eases, we're going to have a melt up again, aren't we?
Yeah. That's the way they tend to manage it. And that's why I kind of laugh when I see people on FinTwit say, oh, the Fed has lost control or whatever like that. It's like when you control money supply and the interest rate narrative, you control everything, so they have never lost control. And that's why I can be a believer in this market. I also think the current scenario, where yields are a lot higher. I think there are a lot of people, a lot more people than you think, sitting in treasuries in the 2-year yielding 5% and not messing around with this equity beast right now. That's why when it cascades and rolls over, it's a tradable 200-point S&P waterfall. And then we get back on our feet again because the performance game starts up again. And if you didn't buy semis on the dip, then you missed the 20% that just happened in 2 days, And so I still think that the market can handle higher yields given the economy is not just turning over and dumping into a recession. That's a really strong pattern for me.
And
We saw that.
And you're not in the camp that because of supply of treasuries, we're the borrowers, we're the buyers. Here's a TLT. They're lagging a little bit behind the speed of the 10-year and 2-year, but we're about to take out last October's low. All they did is move sideways. Do we have a sovereign debt crisis happening across the globe? I mean, it started with the gilts and really started a year before with the most vicious bear market in my career. And I've been around longer than 10 years. So I'm talking about this we haven't seen a move like this in the bond market in my career.
Yeah. That's I still think the bond market can go lower. I think that the 60-40 portfolio is going to be sort of sucking wind for a little while with bonds trading lower and equities really struggling to perform with higher yields. But at the same time, I don't see a curl over scenario for stocks. I still think the bond market is manageable, and as long as what I was saying before is like we've seen periods like 2016, 17, 2011, 12, and in the last year where rates can go higher, and as long as the economy can bear it, the S&P price can bear it. So that's where I kind of look for that dynamic to play in.
It was like that in 87. Where rates were going up, the only difference was the dollar was falling at that time with rates going up. Yeah. So it's almost like people are going, well, why is the market this week? After all this time, we've been talking about higher yields coming. They'll move the dot plots. That all of a sudden this week, we finally started to see the market wake up to the fact. Is it like one last snowflake that causes the tipping point and avalanche to get the snow to go? Things happen slowly, and then all at once.
That's how it always happens, Dale. You know this, right? I mean, that's the nature of like big technical moves, right? Like things like semiconductors where we spend months and months forming a peak. And then all of a sudden, like we see a big waterfall and that whole right shoulder falls off. That kind of looks like what's going to happen to me in SMH. If you have that up there, that's a really good head and shoulders kind of a top.
They all kind of look the same, Tony. A lot of them look just like this. And there's your monthly. So pretty ugly month, but let's get
I need you to widen that out to like a daily. Yeah, there it is.
There you go. So we have a gap lower opening from this 144.
You can see the head and shoulders right there, Dale, where we just broke the neckline, right? Yeah, I mean, that pattern is clear as day to technicians like us.
Well, what's really been completely unimpressive for the whole year with this huge rally that we had in tech and everything, Tony, was
what's that?
The Russell. When you look at it long term, all we did, that broke a head and shoulders too. And even the right shoulder was a head and shoulders. But when you look at it longer term, we had this huge rally in the Qs, huge rally in NASDAQ. And what did the Russell do? Nothing but move sideways. This doesn't look like a bottom to me.
No.
And isn't the Russell American business?
Smaller businesses, though, challenged by higher yields, right?
And banks.
That's the story to me, right? Exactly.
And regionals. Yeah. So this paints a different picture of, the market, maybe the fact that people are saying no recession or not till 27, the Russell saying something else, isn't it?
Yeah. Well, to me, Dale, there's still this bifurcation going on where since the lockdown slam
Yeah.
right? The stocks that have emerged like the phoenix out of there are
Yeah.
big tech,
Right.
right? And what's going on is like you can just group them by market cap, but out of that pandemic lockdown hole, there was big tech got out in front, and then the Nasdaq is behind that, and the S&P behind that, and behind
Right.
that is the Russell. So it's kind of
Yeah.
order of market cap where and it tells the story where the bigger companies are going to survive the lockdown situation and the smaller companies all got shut down. I mean, this is the story sort of in stock version that we're seeing play out right now.
Interesting. We're getting a little reversal in silver and the dollar, which everyone's unanimously bullish on, Tony. Looks like
Yeah.
it might be getting ready to put in some type of short-term top. I
It's
wanted to wrap it with copper, which broke down out of a major triangle. It's trying to break down here. I heard that Dr. Copper is being sued for malpractice for trying to impersonate a bull market. Uh,
that's a great way
uh,
of putting it, Dale. That is a
uh,
great way of putting it,
uh,
man.
because I mean, on Twitter, there are people, when they were excited about the metals, the copper is a big story. There's not enough copper. It takes 10 years to get a copper mine online. And this too is not a bullish signal for the economy, is it?
Yeah, copper has been a conundrum to me all year, right? We're
Yeah,
supposedly pivoting to, this world of electric battery power, which is going to
right.
require God knows how much copper. You can
Yeah,
look at the inventory charts; they're nosediving toward historic low inventories, and then you look at the price chart, and it's sideways to lower every time, and every breakout is met with selling, and you're like, you know what? I'm not going near this thing after a couple of failed attempts. So that's where I am. I've got my hand burned on the copper stove a couple times, Dale, and I'm
yeah.
not going to burn it anymore on that stove again.
Uh,
That's just because, you've seen the price action. No matter what headline comes out, even in a weak dollar environment, it can't get on its horse. So once again, until there's a show me move in copper that actually blows my hair back, I'm not touching the thing.
Well, Tony, I wanted people to know how to get in touch with you and,
Nice.
check out your work and include you in their intelligence gathering. You definitely have a great demeanor to be a trader, unless it's otherwise you're a great actor because you're calm. You're calm and you have a demeanor of, you've been through storms and you want to avoid them. And I'm sure that's one of your goals for your people is to help them avoid the landmines you and I have stepped on.
It sure is. It sure is. And as many people as I can help. That was actually the motivation of launching the Navigator on my own, Dale, was I knew I was going to have a big retail audience. And if it was going to take me helping one person understand
Yeah.
markets a little better at a time, then that's the road that I was going to take. And that's the road I'm on. So I'm happy doing it.
Yeah. You ever end up with someone that learned from you and took your teaching seriously and then began to outperform you?
Oh yeah, for sure. Well, I could tell
Isn't
you,
that great?
yeah,
I mean, I don't consider that like a challenge. I consider that, wow, they were able to turn something into what I couldn't turn it
ab-
into because a
absolutely.
lot of it's in our heads. And,
Yeah.
you know,
Yep.
I used to trade with mental stops, and my first stop was a mental institution.
Yeah,
So,
exactly. Yeah. You actually have to get out of the positions, right?
yeah, yeah. So, Tony, people could catch you on Real Vision as well. You do. How often are you on there?
Yeah, I do daily briefings for Real Vision like every other Tuesday, and those are available on YouTube, right? They're
Okay.
usually done right at like 4 o'clock when the market closes. I have a Substack channel, which is tgmacro.substack.com, where I put out videos on the markets, which are generally like kind of updates on what's going on in the market and performance addresses and things like that. So that's a way that people can follow me there for free.
Okay.
Just put your email in my Substack page, and you'll get my updates, which will be basically weekly video updates. Or follow me at TG Macro on Twitter. Or if you need to ask me about the newsletter, your clients can feel free to send me an email at tony@tgmacro.com. I'd be totally comfortable with that.
Well, Tony, we just summer's over, and today's the first day of fall. It's the equinox.
Is it really? I didn't realize that.
Yeah.
Time to get back to work, huh?
Not yeah, back to school, Tony, not Cornell. But back screen time. Anyway, I hope that you have a great fall trading season for you and everyone who follows you and takes what you say seriously, and would love to catch up with you a little bit down the road, buddy, and see how this commodity situation is playing out. I know that I'm looking to back up the truck on miners when the GDX is around 24.5 or so.
Ooh, I like it.
So,
I like it. I
so
like it when you put it on the line like that, Dale. I'll keep an
yeah,
eye on that number.
yeah. So I prefer the silvers because I was taught by a great trader that the white stuff leads. So
Interesting.
that's
Very
my
interesting.
view. So maybe we'll be talking about a bull market beginning in miners. Is it possible it could happen in miners?
That would be great. Well, I'll tell
Uh,
you, did you see that picture that flew around on Twitter about the gold conference where there were nobody at the thing and nobody at the meetings? And that's usually a pretty bullish sign, man.
Yeah, I go back a ways, and I remember when I was bullish before 2000. There was the Y2K scare and everything, and people used to say to me, "Gold doesn't work anymore. It's an archaic object." Okay, that was at between 2 and 400.
Yeah.
Now people are saying the VIX is broken, so don't sell volatility for a while, people, because it's not broken. Anyway.
Probably a good point.
All right. So, Tony, great talking to you, and let's do it again. And good hunting, my trading warrior brother.
Thank you, my man. Anytime, Dale. I'd love to come back on the show.
All right.
Thanks for having me.
Tony Greer, everyone, find him at TG Macro, and keep an open mind, and it'll keep your account open. Thanks, Tony.
Thanks, Dale.
All right, buddy. Adios.
That was great, man. Thanks so much for having me on. I appreciate it.
I enjoyed it, buddy.
Yeah,
I
you're good at
enjoyed
this.
it.
So we'll do it again anytime you want.
Okay. I like it. See you, Tony.